BYD and Tesla have both had actually very good third quarters of the year. Now, yes, BYD's quarter was in some ways better than Tesla's, but in some ways Tesla's was better than BYD's. It really depends on how you look at the two companies. It is true, though, that BYD is currently growing at a much faster rate than Tesla. So what are the pros and cons of both companies? Let's have a look at everything. Let's have a look at what BYD is doing, the batteries, the results, the car sales, how many actual EVs are they selling? What about Tesla? What are their batteries? What are they doing there? What are their future forecasts? How are they going in terms of actually meeting market expectations? Are they growing? Should you invest in BYD or Tesla? I'm going to answer all those questions in this video. Hello, my friends. Welcome to the channel. I'm Sam Evans. You're watching the Electric Viking. Net profit for the third quarter of 2023 for BYD was $1.42 billion US. For Tesla, it was around 1.85. So Tesla made around $400 million more than BYD. Clearly, Tesla is more profitable, but clearly, BYD is growing much quicker. But clearly, BYD is growing at a much faster pace than Tesla. So that's just a short summary. But what about when it comes to actual car delivery figures? Well, in 2022, China EV and battery giant BYD's vehicle sales raced ahead of Tesla's. For all battery electric vehicles, Tesla is still number one. Only by a very small margin though. The gap is narrowing fast. BYD could seize the EV crown before the end of 2023. BYD also has significantly higher gross margins than Tesla now. Hasn't in the past at all, but that has changed. And they've closed the gap in net income and revenue. On the 18th of October, Tesla reported its worst earnings in around 2 years, missing lowered analyst views by approximately 5%. I don't think the numbers were that bad, but Wall Street is acting like everything is going to hell in a handcart. Is that really true? No. But anyway, Elon Musk did temper expectations about the soon-to-launch Cybertruck, a future Mexico plant, and a number of other things on the conference call which discussed the actual earnings. BYD announced strong third quarter earnings and sales growth versus Q2 and a year earlier. Gross margins surged. They're now above Tesla's. Actual car margins, though, are not. Car margins are relatively, well, still in Tesla's favor. BYD is making a lot of profit on areas of the business that are not automotive, not cars themselves. BYD, in fact, makes about $1,500 on every car it sells. Tesla makes quite a bit more than that. But when it comes to other areas of the business, that's where BYD is very profitable. Tesla stock has had a strong 2023, but it plunged after the earnings results. In fact, it went down significantly, and it's continued to decline in the subsequent days afterwards. The EV maker is struggling to grow with profit margins that are now in line with traditional automakers. Even with this recent slide, Tesla stock is obviously not valued like a traditional automaker, and it shouldn't be. It's not a traditional automaker. Yes, Wall Street is trying to claim it is. That is blatantly false. Anyway, BYD stock has had a decent 2023. It's setting up near potential entries. Tesla versus BYD sales in 2023. How are they looking? How do they compare? Tesla deliveries fell to 435,000 in Q3, declining from Q2's record of 466,000, missing the consensus of 455,000. I still think those delivery numbers were pretty good, especially considering Tesla did shut down the factory in China to retool for the new Model 3, and they actually have also upgraded the Model Y at the China factory too. Model 3 and Y deliveries slowed to 419,000. Most of that was Model Y. Model S and Model X deliveries dropped to 16,000. Production declined to 430,500 from Q2's 479,700, amid factory upgrades, like I said, to the biggest EV factory in the world, which is Tesla's Shanghai factory, and an effort as well to slash inventory. Sales will rebound in Q4, almost certainly. Tesla Model 3 Highlands are now reaching customers in China and Europe. The updated Model 3 deliveries have begun, therefore, and Cybertruck deliveries will begin probably in December. But obviously the Cybertruck is not going to be sold in big numbers this year, though. Meanwhile, BYD sold 431,000 all-electric vehicles in Q3, only a few thousand less than Tesla. Plug-in hybrids? If you add those to BYD's number, their total sales figures were 824,000 for the quarter. In September, BYD sold 431,603 all-electric vehicles in Q3, just a few thousand less than Tesla. But if you include BYD's sales of plug-in hybrids, sales were 824,000. In September, BYD sold 151,200 fully electric vehicles, showing that they are actually probably on a slightly higher pace than Tesla is right now. Because if they hit those numbers for 3 successive months, then obviously their EV output pace is at around probably 453,000. So just slightly above Tesla's possibly, but it could be very similar to Tesla, because now that Tesla are once again building Model 3s, Highland at the factory in China, it's probably likely that China and BYD had a very similar run rate in terms of their actual fully electric car production. Overseas sales rose to 28,000 in September versus 25,000 in August, 18,000 in July, and 10,536 in June. So BYD is slowly growing its overseas exports. It's still a very China-reliant country. More than 95% of the company's sales are still in China. That's something that has to change, and BYD are very well aware of that. They are trying to grow outside of China. BYD has sold nearly 2.1 million vehicles this year. About 50% of those fully electric and about 50% plug-in hybrid. Keep in mind, the plug-in hybrid vehicles will continue to be a drain on BYD's overall financials because they have far more problems, and in fact, they're the most unreliable vehicles on sale right now in China, as confirmed by numerous data sources giving us full information on all Chinese vehicles sold in the country. Unfortunately, plug-in hybrid vehicles are very prone to fires as well. And that has really exposed BYD to global criticism of fires in their cars, which is not really occurring in their EVs at all. It's really just occurring in their plug-in hybrids. BYD is aiming to sell at least 3 million vehicles in 2023. So it should see profits continue to increase along with the sales increase as well. Now, as you can see from this chart, in the second quarter of this year, Tesla still easily outsold BYD in EV sales. But in the third quarter, EV sales were almost identical. That said, both companies will almost certainly grow their EV sales in the fourth quarter of the year. So there's no way of really knowing how that's going to look by the end of this year. Tesla leads BYD in EV sales globally, but the race is incredibly close. Price cuts. Tesla slashed prices worldwide in January, with further cuts since then. The price cuts made Model 3 and Y vehicles eligible for US tax credits of $7,500 and obviously spurred more sales. China's EV makers, including BYD, also slashed prices. People say in response to Tesla, but that's not actually true. They've been slashing prices and having a price war now for years. Tesla is just a part of that picture, and I don't believe that Wall Street fully understands what's going on. So they say that Tesla slashed prices, therefore everyone else did. Not really accurate. Tesla has tweaked some prices higher at times, and in fact, it has just increased prices within the last few days of some models in China as delivery times have grown by a couple of weeks, meaning expanded numbers of orders. On the 1st of September, Tesla sharply cut Model S and X prices in China and the US. The base Model X is now eligible for the $7,500 federal tax credit, meaning it only costs $72,500, which is, I believe, a very good price. Tesla also cut the full self-driving price from $15,000 to $12,000. On the 5th of October, Tesla cut US prices of the Model Y and the Model 3. That came a couple of days after launching a lower range Model Y that's $3,750 cheaper, which is the Tesla Model Y standard range, which comes with CATL's lithium iron phosphate batteries. Tesla now sells this exact model, rear-wheel drive, lithium iron phosphate battery pack, standard range, Model Y, well, basically in every single market around the world. So that is Tesla's most affordable car. In the United States, it costs $44,000 US, but it does qualify for those tax incentives, potentially bring down the price to, well, depends on other incentives, but approximately $37,000 US. In mid-October, Tesla cut the base Model 3 price in the UK and Model Y prices in Canada. Prices were also slashed in Australia. Right now, the old version of the Model 3 is actually available for sale at a historically low price of around 55,000 Australian dollars, which is approximately $35,000 US. Tesla Model 3 revamp. Tesla unveiled the Highland. It's now selling those vehicles at a higher price in Europe and China. On the third quarter earnings call, Musk did discuss the Mexico plan, which is obviously very necessary for Tesla's new model, which it needs very badly, in my opinion. I mean, yes, Tesla's still going to do really well over the next couple of years, but the new Model 2, which I'm calling it, is the $25,000 EV that Tesla will manufacture, and it will sell in higher numbers based on Tesla's plans than all other models combined. Double them. Combined, double them. Tesla says it'll sell more than double of all other models combined. In other words, Tesla plans on selling millions per year of the new Model 2. However, that factory and the output won't be actually complete until 2026, which is obviously still a couple of years away. A huge selling point, though, for a made-in-Mexico cheap EV is that it can still take advantage of a limited US competition and the $7,500 IRS tax credit. Now, BYD does have to compete against Tesla in China, but Tesla does not have to compete against BYD in North America. The North American car market is open. I mean, GM and Ford have paused EV plans, giving Tesla a huge advantage. Let's see if they can take advantage of that over the next 24 months. Production. Tesla capacity increased at its Berlin and Austin plants after significantly expanding its huge Shanghai factory last year. Demand hasn't kept up with expanded output, even with Tesla slashing prices and curbing production below capacity, particularly at the China plant. Tesla Shanghai no longer needs to export many Model Y vehicles to Europe because of the fact that they're making large quantities in Germany now. Tesla has entered Thailand and Malaysia. This will be a test to see how much demand Tesla can have in Southeast Asian countries that are not in China. A cheaper Tesla model would be helpful in these markets. Tesla aims to produce 1.8 million vehicles in 2023, though capacity is actually above 2 million. BYD's expansion has been staggering this year. BYD is ramping up EV and battery production with more China plants coming online. It's already building an EV factory in Thailand, which will begin production in 2024 for right-hand drive markets: the UK, Japan, Australia, Malaysia, Thailand, etc. New Zealand, I should add too. In June, BYD announced it would build an EV plant in Brazil at Ford's former factory. BYD also is expected to build or buy at least one plant in Europe. It's been in negotiations with Ford to buy one of its old factories there as well. BYD has unveiled several new models. The small Seagull starts at around $10,700. The Seal is now available in a number of markets at very low prices, undercutting the Tesla Model 3. BYD's upscale Denza brand has begun deliveries of the N7 crossover, a Model Y rival, following the D9 minivan in late 2022. The Denza N8 SUV will soon follow. BYD's super premium brand, Yang Wang, will begin deliveries in October of the U8 off-road vehicle starting at $150,000. Apparently, they already have thousands of orders, said the company. BYD also unveiled their F brand, pricing slightly above the Denza brand. The Fangcheng Bao's off-road Leopard 5 hybrid should start deliveries this year. As you can see, the company now has a number of brands and it has many different models. In fact, I believe there's a little bit of confusion coming from customers as to what models and brands they have because there's so many of them now. How far will this go? Will BYD continue to bring out new models? They appear to be not slowing down their new model releases. And to be honest, I find it very difficult to actually stay up to date with all the different brands and models that they now have available in China. Meanwhile, BYD will formally launch the Song L, a direct Model Y rival, on the 31st of October, revealing prices and specs at a similar range to the Tesla Model Y, but it's a little bit bigger in terms of length, but not in terms of interior space. BYD is expanding massively overseas. Thailand has become a big car market, but it has entered many Asian countries, including Japan, India, Malaysia, Australia, New Zealand, Singapore, and more. It's the number one EV seller in Israel, and it's entered most of Europe. That said, sales have been disappointing in Europe. Prices are probably a little high because it sells through local dealers. BYD has also started deliveries in Mexico as part of a big push throughout Latin America. BYD has led its export push primarily with the Atto 3 small SUV, but it's adding the Dolphin and the Seal to many overseas markets. The Dolphin is basically the similar size to a Toyota Corolla, and the Seal is very similar in size and specifications to a Tesla Model 3. Exports, though, like I said earlier, are still a small share of sales, but up sharply from almost nothing in mid-2022. Notably, BYD is generally selling EVs overseas at higher prices than in China, boosting margins even after shipping and other related costs, say the company. BYD has also said it has no plans to enter the United States market for personal vehicles, so it does build EV bases, buses, and trucks in California. Tesla versus BYD batteries. Tesla traditionally has not mass-produced its own batteries, but it does have a joint venture partnership with Panasonic. For lithium-ion batteries, its joint venture partner makes the cells and Tesla packages them. It also buys lithium-ion batteries from South Korea's LG. Tesla has bought lithium-ion phosphate batteries from China's CATL, and it also gets BYD Plaid batteries for its Tesla Model Y standard range vehicles in Germany. Tesla is working to scale up production of 4680 cells. It has increased energy density of those cells by 10%, and apparently other manufacturers believe this cell form is a good type of cell to use, and they've now started plants for production of similar sized cells themselves. 4680 batteries are standard lithium-ion chemistry, NCA, nickel, cobalt, NCM, nickel, cobalt, manganese, and the larger form factor offers the potential for various benefits and cost savings. Tesla's 4680 production has picked up output in recent months, but is still relatively low in comparison to BYD, who are the second biggest battery company in the world. BYD, meanwhile, is, of course, ramping production of its Plaid batteries at a very fast pace. Plaid batteries are a specialized lithium-ion phosphate battery pack, and BYD is ramping up battery plants to supply third-party EV makers, as well as storage, so mega storage projects, and beyond its own EV needs, it sells through a number of other companies. Tesla, of course, does manufacture the packaging for its mega battery packs, but importantly, the software is a big part of the reason why many consumers, large-scale consumers, are choosing Tesla energy storage product over BYD. Even though BYD is cheaper, they believe that the software behind Tesla's large battery packs actually works better, and that's one of the key reasons. A lot of people are miffed by this. They think, why are people buying Tesla big batteries? There's these huge big batteries being built by Tesla around the world, and the key reason is Tesla's software advantage. In fact, Tesla uses BYD battery packs for Model Y and then uses its own software to actually provide their cars with more range than similar BYD vehicles. BYD, like CATL and some others, is working though on sodium-ion batteries, which could be a big part of the future of the EV automotive industry. Those would be useful in smaller EVs, making them cheaper, and for mass-produced energy storage. Both Tesla and BYD are expanding in battery storage for home and business applications and utility scale projects, though Tesla gets its batteries for those projects from CATL and then repackages those battery cells themselves. BYD have teamed up with South Korea's LG for storage in North America and Europe. What about Tesla and BYD's other businesses? Tesla has its own supercharger network in its markets. That's very important in the US and countries like Australia, where third-party charging facilities are relatively limited. Tesla has struck deals with Ford, General Motors, Rivian, Toyota, Honda, Nissan, and many other automakers to give them access to its superchargers in the United States. They'll also adopt Tesla's charging standard on their vehicles soon. So you'll see Tesla plug ports on the side of most EVs being made by 2025 in North America. Those deals and some related charging subsidies will provide a big boost to Tesla's revenue over the next 5 years. But they will reduce Tesla's charging moat in the United States, which has been an advantage for Tesla getting EV sales in the first place. Tesla also has a solar installation business, which it is trying to shrink and move away from. It's very hard to be profitable in that area. Tesla's self-driving ambitions continue, and they're working on full self-driving and autopilot. which is still a source of revenue and profit, especially in the United States. However, even its full self-driving beta remains a level 2 driver assistance system versus a level 4 or 5 fully autonomous system. And it's probably believed Tesla is around 12 to 18 months away from reaching level 4 or potentially even level 5. The NHTSA says it's close to wrapping up its probe of Tesla driver assist systems, which began 2 years ago. Now, on the other hand, BYD makes its own chips, but it does struggle with software. Its autonomous driving software, in my personal experience, and that of many journalists, is well behind other automakers. In fact, in rankings, out of 20 automakers, it came in 19th place. But it's very well aware of this, and it's now hired a much larger number of staff to work on its software and its ADAS systems to improve this Achilles heel. Along with its in-house batteries and other vertical integration, this has helped BYD expand rapidly in the past 2 years, as many rivals have struggled from chip supply and other supply shortages. BYD actually, because of their vertical integration, had no supply chain issues whatsoever over the past 3 years. In addition, BYD has its own solar operations as well. BYD will introduce, it says, at least level 2 driver assistance systems in its Yangwang and Denza vehicles, as well as some BYD brand EVs over the next year. It's yet to be seen if that will happen. Level 2 systems, many with LiDAR, are increasingly common in China, especially in premium models. BYD is largely known for its automotive operations. BYD Electronics, which accounts for an increasingly smaller share of the company's overall revenue, is involved in mostly low-margin businesses such as smartphone components, iPad assembly, and other areas, including masks. On the 28th of August, BYD Electronics agreed to pay $2.2 billion for the mobility business Jabil or JBL that will boost the unit's exposure to Apple. Tesla earnings. Tesla earnings last quarter plunged 37% versus 1 year earlier to 66 cents per share, the lowest EPS since Q3 of 2021. That was approximately 5 to 10% below estimates, even with analysts rushing to cut targets heading into results. Revenue, though, rose by 9% to $23.4 billion. Ongoing price cuts have propped up vehicle demand, but at the cost of margin. Tesla's gross margin was around 18%, down from 18.2% in Q2 and 25.1% a year earlier, factoring in R&D costs, which most automakers include in their gross margin calculations. Tesla's margins decreased to 12.9%, which is still a good number, especially in the EV sector, where the only two companies making profits in this area worldwide are BYD and Tesla. Tesla's operating margin plunged to 7.6% from 17.2% a year earlier. That is now in the normal range for traditional automakers. Net income decreased to $1.85 billion from $2.7 billion in Q2 and $3.3 billion a year earlier. Analysts have followed Q3's results by cutting Tesla earnings estimates for 2023 and 2024, something they've been doing all year. BYD, on the other hand, while its earnings are booming. On the 30th of October, BYD reported strong third quarter growth in line with preliminary results. Net income came in at $1.4 billion, so still less income than Tesla, 1.4 versus 1.85, so around $440 million more income went to Tesla. However, BYD's net income was still up 82% versus a year earlier, and nearly 53% versus Q2. Revenue swelled by 38.5% a year earlier versus a year earlier to RMB 162 billion or 22.6 billion, around about 1 billion less in net revenue versus Tesla. However, that was an increase of 38.5% versus 1 year earlier. The full results were in line with preliminary profit figures released earlier in the month. Tesla's net profit was still 31% higher than BYD's though in Q3. So 31% higher, it's worth keeping that in mind. Like I said, BYD's growth is staggering, but Tesla's profits are still higher. The gap though is narrowing in a short span. It has come down significantly. Tesla's net income was and 92% higher in the first half of 2022 than BYD's, 345% higher in Q1 2023 and 190% higher in Q2. BYD's gross margin was 22.1%, the highest since Q3 of 2020. That's up from 18.7% in Q2 and 19% in Q3. What about as a result of these earnings and these numbers, Tesla stock price has declined significantly from around $255 down to around $200. That's a pretty large fall. BYD stock, on the other hand, has stayed fairly steady. Its stock did slump 28% in 2022, but its shares are up 28% in 2023. The EV giant hit a 52-week high of $36.27 on the 31st of July, but then it sold off hard for several weeks. Warren Buffett's Berkshire Hathaway has been a long-time major investor in the company, but Berkshire has sold slices of its shares in BYD in 12 successive moves, starting in late August. The latest was disclosed on the 26th of June, but Berkshire does still own around 5% of BYD, down from the 10% that it owned a couple of years ago. What about market cap? Tesla has a market cap of $627 billion as of the 30th of October, well off its peak of $1 trillion. That's still far above BYD's $85.7 billion. $627 billion market cap for Tesla, $85.7 billion for BYD. Those numbers, in my opinion, probably not reflective of reality here. Now, is Tesla's valuation legitimate? I think it is. If you have a look at Amazon, compare Tesla, one of those is clearly the better company, and it's not Amazon, in my opinion. But maybe BYD's valuation of $85.7 billion is far less than what it should be, considering its current amazing growth. With Tesla margins now more like a traditional automaker and growth constrained for the next quarter, Tesla stock possibly has a high-ish valuation. Long term, though, I believe Tesla stock is actually still a good buy. That said, BYD is still the upstart versus Tesla in terms of pure electric vehicles, but it's targeting the EV title, and it could actually get that title by the end of this year. BYD makes its own batteries and its own chips, and it sells those batteries to third parties, even including Tesla. Musk has talked about making a $25,000 Tesla. BYD makes EVs profitably at below $25,000, but only in China, not elsewhere. With Tesla no longer production constrained, it has shifted to cutting prices to support demand. BYD has expanded in a number of big markets, and that is key to its efforts to be a global auto giant. Its model lineup continues to expand dramatically with big moves upscale, but it's still very dependent upon China, and that is, of course, a risk in and of itself. Tesla will begin Cybertruck deliveries soon, but, of course, there is a lot of unknowns. Significant deliveries won't occur until well into 2024, with Musk predicting it'll be a financial drain on the company next year. A next-generation vehicle will likely arrive in 2026, called the Model 2, and Tesla plans on building millions of those every year. So, this is the story of BYD and Tesla over the past 12 months. One company growing at a rapid pace, the other one growing more slowly, but still growing. Both of these companies, in my opinion, are the two most promising automakers in the world and will likely be the two biggest automakers by 2030. I've been saying that since I started this channel 2 years ago, and I'm sticking to it. Do you agree with me? Do you disagree? Let me know in the comments. Thank you for watching.